Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic morning so far. Looking forward to trading with you guys today and going over our COT report and looking for more price action setups. So we'll go ahead and jump into this. Hope everybody's doing well today. Also want to give a shout out to anybody new with us in the program. We actually had 3 new people sign up this morning, so I don't see them here yet in the webinar. That's okay, but if you're here in the recording, just want to say hello to you guys. If you are new to the program, feel free to let us know where you're from, what state you're from, or what country you're from, or what province from Canada you're from, or wherever you're from. Let us know. Let us know on YouTube, also where you're from in the comment section down below. But let's go ahead and get started. As always, I need to remind everybody about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, so let's go ahead and update our COT report. I mentioned this morning that we're doing pretty good, aren't we? A lot of these trades have really moved in our favor since yesterday. So let's go ahead and update these right now. Let me pull up what I've got here. So I have 3 trades still open. One of these closed. Let's see. So let's update the top first. So on the pound yen, on as far as COT report trades go, first of all, yesterday we were up 380 pips in the live trading webinar. So let's see if we've improved from 380, and I believe we have. So right now I'm up 230 pips on the pound yen. So that's almost 100 pip increase overnight, which is awesome. Pound CAD was up 119 pips yesterday. Now that's up 172, which is super awesome. It looks like my NZD JPY closed. I need to figure out how much that closed for in just a second. NZD CAD is still open. That was up 38 yesterday. Now it's only up 22. So that's changed just slightly. And then, like I said, the NZD yen is closed. So let me find out what the NZD yen closed for. Give me a second here. I gotta find it in my activity or order history here to see how much I made on this trade. Give me a second. Oh, I have to go. That's right. I have to go to MT4. Okay. So we're going to find out how much that one closed. So that's what I have open right now is I just have 3 trades. I talked to some traders this morning. They said, you either have all 6 open or you have. So if you have all 6 opens, that probably means you didn't use a trailing stop, and that's fine. You don't have to. Or your trailing stop was dynamic and not like the MT4 trailing stop. So yeah, if it makes sense if all 6 trades are still open. And actually I'm curious to see, maybe we'll do that together. I'm curious to see what that would have done if you had left all 6 trades open. Okay, so I've got this here. Let's go to order history. Okay, and my NZD JPY is closed. Where is that? Right here. 8-4. Yeah, there we go. Okay. So the way I figure this out is I take the entry or the exit minus the stop loss. So I got out at 86.686 minus the 86.395 times 100. There you go. So I made 29 pips. So 29 pips is what we made on the NZD yen. And I'm closed out of that one now. So I'm going to mark that one in green, but I still have 3 going right now. 6 going, 4 going. That's good. You guys are all doing great. Like that's exactly where you should be. I talked to another trader this morning that only had 1 or 2 trades going. And it all just kind of depends on a couple factors. The timing of when you got in on Sunday night, the type of trailing stop that you used, and if it was an MT4 trailing stop, it also matters, like the amount of points you set for your trailing stop. So I'm up 484 pips on the week so far. And I'm going to let those 3 trades continue to roll. I do want to just see real quick where I would be if I didn't use a trailing stop. So obviously these would be the same spot. So I'd be up 230 here, 172 here. We're going to find out what that one is in just a second. I'd be up 22 on the NZD CAD. So let's find out where the NZD yen, Aussie yen, and Aussie CAD would be. Let me pull this up real quick. So let's go to NZD JPY. And let's pull up that weekend indicator. I just want to see where that would be. Okay, so, and I got in on my trades. Here, let me show you where I got in. The timing of when I took my trades. It was this is the Tokyo Open right here. I took it about 4 hours later. So that would put us about right here is when I took my trade. So I had a really good timing with these trades. Yeah, I had pretty darn good timing, but let's see. If I were still in the NZD yen, I'd be up 48 pips right now. So let's mark that down. Oops, let's do this. I'd be up 48. And then the Aussie yen, let me put that one in here. I'd be up 36 if I were still in that one. And then the Aussie CAD, let's see how that one's doing right now. If you were still in that. Right here. I'd be up 18 if I were still in that one. Okay, so I think slightly better without the trailing stops. Let's see, equals sum. Yeah, so, okay, not a huge difference, but yeah, it's a little slightly different. So I'd be up 526 pips without the trailing stop this week so far. And we'll find out at the end of the week, if that changes or anything. But it is just kind of interesting to see that we got 2 weeks in a row of if you hadn't used a trailing stop, your results would have been slightly better. Actually, last week it would have been a lot better, and this week only slightly better, which is kind of interesting. But either way, we're happy. Let's read some of these other comments here. Let's see. COT trades were banging this week, but I had to close all for my prop firm challenge. because I had 1 hour before my challenge expired, looking to get into another challenge. Okay, awesome. Okay. Yeah, so that's an important thing that Darwin brings up. So if you're on a timed prop firm challenge, and you need to, end in profit or whatever, so you can qualify for a retry, it's important that you do that, right? I mean, it doesn't make sense to hold on to a trade if you're going to fail a challenge, right? So you might as well close those out. And then, yeah, you can, and that's the other thing too I mentioned earlier. If you pass phase 1 or phase 2 of a challenge, or let's say you pass, uh, let's say you get funded. So we had a trade, at least one trader this week so far that's been funded by the COT report. So if you do any one of those milestones, if you complete one of those milestones throughout the week on a good week, feel free to jump right back into the trades. Uh, yeah, because typically you're going to pass those milestones on good weeks, and typically good weeks just continue good. So you might as well try to capture a little bit more of that if you pass one of those milestones, right? Okay, so let's see. Okay, cool. Okay, good. Okay, so good. So you took some wins on the COT report, down a little bit on price action trades. That's okay. Um, oh, you broke even. Okay. Well, if you break even, they typically give you a retry anyway. So, I mean, I don't know if they didn't, then that really stinks. But they'll often give that to you. So in the future, and also in the future, guys, I think the best type of prop firm challenge is going to be just one that has unlimited time. Just because, we don't know which weeks are going to be really, really good for the COT report and which weeks are not going to be good. Um, so, um, and I know that's kind of recent with some like MyForex funds and FTMO. They just launched that just a month ago. But a lot of prop firms are now offering that, like Funded Trading Plus, Bespoke. A lot of these other places, they're offering unlimited time to pass your challenge. And so as long as you stick to the system, I don't see why you wouldn't pass. Yeah, yeah. Yeah, I don't see a reason to use one with a time frame. The only reason, so in the past, it used to be that prop firms would penalize you for having unlimited time. Like they'd give you, they'd say, here's unlimited time, but we're gonna, the drawdown's gonna be a lot less or whatever. So they'd penalize you another way or punish you some other way because they gave you the unlimited time. That's not the case anymore. There's far too many prop firms that offer unlimited time without sacrificing the other rules. So, generally the standard is unlimited time now, 5% max daily drawdown, and a 10% or better total drawdown. And honestly, in my opinion, if the prop firm doesn't offer at least those three metrics, it's probably not worth trading that prop firm. So if you guys want to reach out to me in the future before you purchase a prop firm challenge, definitely reach out. You guys know the ones I already like. I like FTMO now, especially now because they offer the unlimited time. My Forex funds is fantastic. They give you 12% total drawdown, which is super generous. 12%, that's crazy. That's awesome. And only an 8% profit target in phase 1, 5% profit target in phase 2. So I love my Forex funds. I would argue they're my favorite. Again, I don't necessarily endorse a prop firm. I'll just let you guys know. It's just like I'll tell you my favorites, and you guys can make your own decision from there. My Forex funds is great, and then there's Funded Trading Plus and Bespoke. Those are kind of my four right now that I'm just like, why would you do anything else besides those four? In my opinion, that's just kind of where I'm at. A lot of other prop firms, they have really appealing scaling up plans and things like that often attract traders. But the problem with scaling up plans is the problem with scaling up plans, just in case you're considering one, is they're not designed to help you. They're designed to get you to buy more and not get paid out. Because when you're in the process of scaling up, you're not being paid, right? You're just growing the account so that you can scale, right? And they do that on purpose because they're giving you more and more opportunities to fail. They believe you're going to eventually fail or break some kind of rule. And I've heard with a lot of companies, like for example, with Lex Trading Firm, I've heard horror stories where you scale up and you scale up several levels and then they get to the end and they're like, they'll find a reason to basically, they'll make up some reason for you to fail or something like that. So in my opinion, it's best to kind of stay under the radar, go with the standard 100K or 200K account with one of those companies I mentioned. Don't do a scaling up, just get funded and start getting payouts. That's to me, that's the best use of a prop firm challenge. Yeah, so those firms are FTMO, Funded Trading Plus, My Forex Funds, and Bespoke Funding. Those are the four that I like and I've done challenges with. Yeah, so Brooks says My Forex Funds unlimited time challenge, 5% daily drawdown, which is standard, and then the 12% daily total drawdown is super significant. Like 12%, that is a lot of drawdown to work with, and that's super generous. It's really hard to fail My Forex Funds with the COT report. You have to be doing some really bad stuff to fail with My Forex Funds. I don't know. Like it's just I have never failed My Forex Funds with the COT report ever. Um, yeah, it's hard to do that. Can you still fail? Like I have failed My Forex Funds challenges with different strategies in the past, but never with the COT report. I've only passed. So, all right, guys, I think that's pretty good. So, pretty good week with the COT report right now. Obviously, it's a long time coming. July was kind of rough. June was really our last good month, and so, I can't complain to see August doing well, and I'm, hoping it continues this direction. Um, oh yeah, that's another good point. So Brooks says if you're looking to start one with my Forex funds, let me know. Can usually find a 5% discount. Sometimes they have a 12% discount on their Facebook page. Yeah, in fact, every time I've done a My Forex Funds challenge, I've just gone on YouTube or I've gone on Google and just searched for a discount promo code and I've plugged it in and I've always paid less than the like never, let's put it this way, guys. Another thing, never ever pay full price for a prop firm challenge. Okay, just putting that out there because there's always promo codes. Okay. They don't have a promo code, they're lying. They have a promo code. So they want your money. So yeah, definitely find a promo code. I actually have a promo code for Funded Trading Plus. I'm an affiliate with them if you guys want to go with them. Um, Again, I don't want to push you either way, but if you do your research and you like Funded Trading Plus, um, then go ahead and let me know because I am an affiliate with Funded Trading Plus. All right, guys. So let's go ahead and jump into our other trades. Um, Okay, let's talk price action now. So fun, it's always fun to talk about the COT report, isn't it? Especially when it's a good week. And we do have COT report tonight. So for those of you that are new or watching this for the first time, or like I said, we had 3 new people that signed up this morning, and we had several yesterday. So for those of you that are kind of new, it might come across as kind of a fire hose of information in this live trading webinar. So if you want to learn more about the COT report and how it works and its mechanics and the risk management and everything like that, we have a webinar tonight. It's our COT report webinar. It's every Wednesday night at 9 p.m. Eastern. Okay, so put that on your calendar if you want to come to that. It's going to be, you just go to the website the way you showed up here today. It's the same way you'll go to that class. You'll just go to the calendar, click on COT report, and the webinar will start around 9 p.m. Eastern. All right, guys. So unfortunately, this trade did not work out. USD Frank tagged my stop loss. This was kind of annoying because I this we had the right idea. Let's put it this way. We had the right concept, and let's actually extend this out further. This trend is broken, and this is still a bear market trend right here. This is still bearish activity. It just kind of stinks that the market came up to here basically and then pulled back. So this one I ended up stopping out on, unfortunately. What could we have done better with this trade? I think we could have looked at some of these other liquidity zones. So we just said this looks like a good zone right here, and I don't necessarily disagree that I think it was, but obviously this liquidity zone was a little bit better. right? How could you find this? Typically, let's do a rewind. Typically, there's usually something up there because whatever happened up in here led the market to pulling back very quickly. Yeah, there it is. So Sonar Labs got an order block right up in there. Let's see. Order block detectors got one up in there. Smart money. Yeah, so this area was a good area, this original area, but it looks like this area was the one that came in clutch and actually did really, really well. So now if you play the market out and let it kind of do its thing, it came right up to that zone and pulled right back. So there's the market right now. So I think what could we have done better? I think we need to be more picky with our zones. Okay, so sometimes you can't just take the first zone available. Like this one was the first zone. This was the next zone up here. And if we had taken that one, we'd be sitting really hot right now. We would have just triggered right in and we'd be up, however many pips this is, 20, 25 pips on that trade. Okay. So we just need to be more picky with our entries, but it was still a good opportunity and it still may end up continuing lower. I mean, technically, the market came up, formed a lower high than this high. So, I mean, I don't know why anybody's buying this right now. I really don't. I do not see a reason to have a locked in buy position here. I just don't see it. I just don't. Um, yeah, it's not good. So when you see the market kind of traveling along the trend line like it's doing here, it's just kind of up and down on it, but mostly hanging out on the trend line. It's a terrible sign if you're a buyer. It's a terrible sign. So it's a really good sign if you're looking to sell. Unfortunately, we just got whipped out on that one at the next liquidity zone and it came right back. Okay, so now we just got to look for another one. Um, That's a good question too. So I was looking over the last few losing trades and noticed they were on the 15 minute. Would that affect things being on the 1 hour? That's potentially. The other thing I've noticed too, you guys have noticed this, and we've talked about this a lot. There's been at least 2 or 3 examples in the last 7 days, so a week, where a lot of these 15-minute time frame trade setups have triggered during that terrible hour, which is called rollover. It happens at 5 p.m. Eastern to 6 p.m. Eastern. It's a dead zone where the market's closed for an hour, right? And like London's closed. It closed like 5 hours before that. And New York closed right at 5 p.m. Eastern. And then Sydney doesn't actually open until 6 p.m. Eastern. That's when Sydney opens every day, 6 p.m. Eastern, right? And so there's a rollover hour where a lot of companies do maintenance and the spreads just go crazy. And you'll get these weirdly painted candlesticks where the market will look like it'll appear the market will dip into an area when in actuality, the spread never actually got there, even though the market painted a candlestick there. And so that's why it gives you the illusion that your trade triggered and it will make you extremely frustrated because you think you got triggered in and you're like, why didn't I get triggered into this trade? And that stinks. So maybe that's a good idea to spend some more time on a higher time frame. Maybe we'll find better liquidity zones out here. I think maybe we'll do that and just be a little bit more patient. And then if we can't find anything, maybe we'll jump down to a 15-minute again. But I think there's a couple of reasons for this, mainly just to help us find liquidity zones that are a little bit more significant and more in sync with what's actually happening in the market. So I think that's a great idea. So it's not dumb at all. I think that's probably what we should have been doing for a while now. Okay, so let's kind of navigate through here and just kind of draw our lines out. So here's a nice little trend on the Aussie franc. When this old resistance breaks right here, I want to be notified. So let's go ahead and write an alert here. So basically, for those that are new, what we're trying to do with these types of trades, so this is different from the COT report, is we want to wait for the market to break through a structure point, typically a trend line, but it doesn't have to be a trend line. It can be support or resistance, but it seems like the trend lines are pretty gnarly. If we can get them, they seem to work a little bit better. Once the market breaks through that trend line structure, then there's an opportunity to retest at liquidity and get a really good RR ratio trade. That's what we're trying to do with these setups. But I do want to highlight this comment. This is really good. So Sean says this is a good reminder why most people back test can lead to misleading results. Yeah, especially on lower time frames. Yeah. Yeah, just because you would have said, "Oh, I would have bought there, I would have sold there," when you go back and back test through the replay tool, yeah, it can mess you up. So there's there's nothing like forward testing and actually taking the trade before the market's actually done anything. Like there's nothing like it. So you just kind of have to get out there and start getting that experience of taking those trades. It's kind of interesting. We have people who have been trading the COT report for a long time, and for some people, this is your first week with the COT report. So congrats if this is your first or second week with the COT report, because these have been pretty good weeks. I do want to make sure it's clear that these good weeks aren't normal. I mean, they're normal, but they don't happen every single week. Don't expect to make 500 pips a week every week. We don't do that. I'm not Warren Buffett. And even if Warren Buffett could do that, he wouldn't be Warren Buffett. That's crazy. You can't do that. What we have averaged is 185 pips a week. And you can see that right here on the COT report journal. We're just currently above 185. That's what we've averaged. So there's going to be weeks where you make 500 and other weeks where you give some back. But if you can average 185, that's fantastic, right? So, some people who just started trading the COT report this week, some of you already indicated that you closed your trades early. That's okay. I know that's awesome. But in the future, please don't do that. In the future, please hold your trades till Friday. If it's a COT report trade, you'll thank me later. You'll thank the strategy later, just because that's the nature of the COT report. So yeah, it's important to have that kind of patience. All right, guys, let's continue here and see what we can find. Some of you, it was fun. I had some one-on-ones this week with some of you, and some of you said, Steve, I've never had a trade that's made 100 pips before or 50 pips before, let alone 200 pips on a single trade. It is exciting. It is fun. Enjoy it, but just remember, like there's a price to that, right? And the price to that is you sometimes you're going to get it wrong, and when we get it wrong, we need to stop out, and those stop losses can be 50 to 100 pips, or sometimes a little more depending on the currency pair, right? All right, this one I'm going to keep an eye on because it's looking a little bit weak here, but I do want to see if it can break below this right here. If it breaks below here and retests, then it's probably on its way down. So I'm going to put an alert there. It's always exciting to be making money, right? This CAD franc is so bearish right now. I've been trying we canceled this trade the other day, but I can't get this one to trigger. I've been waiting for it to come up to here, and then I've been trying to sell it up there. I just can't get it to come down, or I can't get it to go up. It's just so bearish right now. Ooh, okay. So this is the CAD yen. Dang it, kind of mad I didn't take this one. Yeah, that was one we looked at yesterday. Dang, kind of mad I didn't take that. Basically had a lower high, lower lows, and then a break in structure. And now ever since it did that, it's been struggling to continue up. So probably some bearish activities coming with this pair soon. This is a really steep trend line. I really don't like to trade breaks of structures on a really steep trend line like this. However, we can do it. So, and there's a specific way to do this. So like we could trade this one. Here's the franc yen. And you'll see right here, you've got a nice trend line. You've got 1, 2, 3 points of engagement, right? And then you've got a break in structure right here. Okay. And now you got to find liquidity, right? So now that you found your break of structure, you have to find places where that's going to be. Most likely there's something right up in here that we could look at. Let's see if there's something else we're missing. So let's turn on these order block indicators and see if there's something else out here. We might need to go to different time frames to see if there's something that we're missing. Honestly, you have to go. So I wonder if this is at a record high. That's why I'm not finding liquidity above this. Yeah, this franc yen must be at a record high because I don't see, yeah, it's at a record high right now. The last time it was up here, you have to go back over 15 years ago, and there's no such thing as liquidity at that point. That's too old. That's way too old to even consider. So you're just speculating on the top, basically, if you're selling this one right now. You're definitely just kind of guessing where the top of this market might be. And I'd hate to do that. I'd hate to trade it long. I'd hate to trade this one long or short just because how would you know, right? How in the world would you know that? You don't have really any clues or anything. So I'm probably going to skip this one. If you guys want to place a sell right here, you can. It's a little bit speculative, but you can place a sell right there and then let that fly from there if it works. Who knows if it will. I kind of think the market will try to break out again and then maybe do a pullback. I don't know though. So that's why I don't want to guess on it. But there's an option for you if you want to try being a little bit risky there. There is at least an option that might be worth looking at. Okay, so let's continue here. This one's over. Yeah, this one's over too. Hmm. Yeah, I'm wondering on this one if that's gonna break soon on this euro yen. It's starting to slow down. You've got an apex high right here and a lower low here. Maybe a head and shoulders in the in that's coming. So yeah, if I can break below that support line, then we've broken that structure. So I'm going to put an alert there. So I'm just going to have to wait and see and get an alert. It's pretty nice, guys. If you haven't done this already, download the TradingView app on your phone. By the way, just on a side note, this is not trading necessarily, but I had alerts turned on in pretty much all my apps on my phone. And now I just basically have it so like I only get notified if somebody's calling me now or texting me. And so like basically I turned off alerts on my phone and I can't tell you how much better I feel not having to be disrupted all day long. So I still get to all my emails. I still get to everything. And on Telegram, I got several people that messaged me on Telegram this morning I need to get back to, but I'm not going to get like notified all the time. And it's been huge for my just like mental. It's been really good. And the other thing, I do leave on these alerts with TradingView. So TradingView is one of the things I leave on just because I do want to get alerted when this happens. And so if I see an opportunity during the day and I get alerted in the afternoon, then I know I can go take a look at that. Right. So anyway, just I mean, I had alerts on everything. So maybe you guys don't already do that, but everything was alerting me and I just couldn't keep track of everything. So now I just have the most important stuff alert me. I guess we don't realize how much our technology disrupts our rhythm throughout the day, if that makes sense. And if you don't stop it, you'll get so accustomed to it over time that you can't actually, like, you won't realize that you got stuck, if that makes sense. It just kind of slowly controls you. And so you have to like overhaul it, if that makes sense. Anyway, that was my experience. Yeah, we'll take a look at the Euro franc here. Let's go back to it. Is this also hourly time frame? Oh, anyone else having issues with alerts on TradingView? I keep trying to set them up and get a pop-up. They're doing maintenance. Weird. No, I haven't had that issue. Anybody else have had that issue? So here's what I see on this Brooks, or who brought this one up. Yeah, Brooks. Yeah. So this is a trend line right here. This was a nice little setup. I'm not sure if this is what you were talking about, but this was nice. Because yeah, you had all your engagements and then you had your break. It's already tapped into liquidity. It came back up into here, tapped into that, and it's already gone. So, for this one, I'm not really, at least with the trend line I've drawn out, I'm not really doing anything. But let me see. Um, Gotcha. Unless you're talking about a long opportunity, because that was the short opportunity and that's already done. Let's see if there's a short opportunity here, or a long, excuse me. This is much longer term and that opportunity's already over. Let's see if there's something else here. Unless you're looking at this right here. Is this what you were looking at? This guy right here? That probably looks better on the 15-minute, but I can see it on the hourly. Um, yeah, you had 3 points of engagement, um, and then your break right there. Um, yeah, okay, I see what you're saying. Yeah, I see. Yeah. Let's go. Let me go to a 15-minute real quick so I can analyze this better. Let's see if we can analyze this better. Oh, I see what you're saying. So you got that line right there where you had your BOS, and then you're also talking about this guy. I see. Nice. Okay. Nice. Okay, so that looks really good, actually. So you've got two BOSs, right? Let's draw them together. Um, right here on the Euro franc, right? So were you able to capture this first move? That was pretty good. This first break of structure right here, this is pretty good. Um, and that's pretty nice, actually. And then it looks like, as you mentioned, it broke through um, this second one here, and it looks like, as you mentioned, um, yeah, second opportunity. Nice. Yeah, it clearly has broken the second trend line, which is good. Let's see if there's a liquidity zone we can work with. Yeah, there's quite a bit down here. There's definitely a lot of stuff going on that 15-minute time frame. Let's try some other time frames to see if it continues. Hmm. So, yeah, it mostly looks good. There's a few hesitations though that I see. Like this is a change of character to the downside right here. Um, that recently occurred, and then you've got these two highs recently are lower than the previous high up here. That's not necessarily a terrible thing, but yeah, it's something I'm just kind of watching. But at the same time, I don't know. I mean, it I could see it going either way, but yeah, I see what you're saying. And there is liquidity right here. Like when you're on smart money, if it's smart money, yeah, smart money's got one there. Sonar Labs got something down here on the hourly, but on the 15-minute, that whole area lights up. Let's try a 30. Yeah, yeah, it's pretty not too bad. Um, like this is generally your area right here. That's generally your area. Yeah, I mean it's starting to wick right here, which is good. Like it's starting, you can see that candle, the current one we're on right now is starting to wick, which means somebody's at least trying to buy this right now. Yeah. I hope that kind of makes sense. Um, and you've got all sorts of breaks of structures on this 15-minute chart. So, and you do have a change of character there that's pretty significant on the 15-minute. Yeah, this is a good setup, Brooks. Like I'm really like, yeah, this is good. I've had a couple of losing trades recently, and so I'm really trying to I guess I'm just trying to make sure that I get a real good winner here. So this does look like a really good winner. Like I guess on the 15-minute chart, it is a change of character. The hourly could suggest a little differently, um but even the hourly is more confusing. The 15 minutes pretty clear that this is a bullish market. 15-minute is indicating that this wants to go higher. So, yeah, that's a great question, Sean. We don't have one at the moment. I thought I might as well just get one started. I probably will do that. In fact, here's what I'll do. In fact, I'm just going to do this right now. I'm just going to add another tab and we're going to call this price action trades. And we're just going to do it in the COT journal. Okay. So that way we don't have to do another journal. It's just another sheet in the same journal. And we're just going to call this price action trades. And then in here, I will update just like the trades we've taken, and I'll put in, the percent gain, percent lost, RR ratios, just pertinent information you'd like to know about any strategy you're trading, right? But yeah, we'll start doing that. Okay, cool. So yeah, so here's what I'm thinking. We have time on this trade and we still have 20 minutes left. So this is a really good one. Nice work, Brooks. I do want to see what else is available. So let's come back. I'm going to write this down. Um, just want to make sure I don't want to butcher my week with the price action trades. I've already had two losers, so I don't want to do that again. Um, okay, so let's continue. Let's go back to the hourly chart and continue our search. Okay, this one we have an alert on the hourly time frame for the euro yen. That does look pretty good. So let's just wait for that one to alert us. This one, I think I got alerted on this actually last night. This one's kind of interesting. So you have a trend line, clear break of structure here. And then this thing has gone back up. So it's a little bit, I would say it's a little bit unstable. But again, we need to figure out where's a solid liquidity zone, you know, because there's some liquidity here, but is there something above this? I've often seen the market be sneaky and just go barely above and then shoot down, right? Happens all the time. And so that's why you want to do your homework and see if there's anything else out there. Like, yeah, there it is. Yeah, so I do. This happens all the time. So, you place your setup like this. So we do this and I do this all the time. You put in a little sell order here and then you stop out just at resistance there and it looks perfect. And then what ends up happening is the market goes right to the next liquidity zone and then it does what you want it to do. All the time it happens. So I had a feeling. So with this one, can we trade it? Yes, but I'm not interested in this area. I'd be interested in the next area. So let's see if this is something significant. Can we work with it? Is this really a significant liquidity zone? Let's find out what this red area actually is. Man, you have to go back pretty far for this. Dang. Holy crap, I'm gonna go to a 4-hour time frame instead. Yeah, there we go. Let's go out here. Okay, this is all the way back in 2020, actually. So yeah, and this makes sense. So you have a nice little structure point right here back in 2020. The market broke that structure here, and also there was a little something here, broke that structure here. And yes, whatever took place generally in this general area is liquidity. So this Euro Kiwi probably will have a significant pullback when it hits that. And so this is doing your homework, guys. This is really good homework. So you go back and do that. Now you can go back to where we are with this market and probably set an alert and or even just place a trade there. I don't think that's a terrible idea. This one would be a little bit more of a longer term trade, but look at this candle here on the 4-hour chart. See this candle? This is a bullish candle. I know I mean, it's like a red candle. Look at this. That's about as bullish of a candle as it comes. You have a huge wick, right, to the downside, and the body is just this tiny little sliver at the top. That is about as bullish as it comes as far as candles go. So yeah, that you don't want to sell this one. You really don't want to sell the Euro Kiwi. Yeah, you're gonna get yourself hurt selling this one. Um, yeah, you get yourself in a little bit of trouble there. So let's go back down to that 2-hour and let's put up. So we could almost look for longs on this, honestly, but you could. The short opportunity is not until actually. Let's go back to that 4-hour again. This is the short. Maybe short up in there, but not until you get up into there. Let's try that 2-hour. Yeah, it's the same. Yeah, exactly. So I'd say with the Euro Kiwi, you just want to buy dips until it hits there. But it's how many pips away is that? That's still, yeah, it's like 91 pips away. Yeah, it's like 91 pips away. So, I mean, again, you could just simply place a short right there above this resistance. There's going to be a lot of selling activity up in here that might be worth looking into. But I think almost the more immediate trade is to find a buy. How far is that buy? Like, what could you do? Like, if you wanted to buy right now, I think that's actually not a bad idea. You could buy this and then you could go to there. Some people like to go midway into a order block. So you could go something like that. You could do something like that, but I don't know. That kind of messes up with our setup. So just because it's leaning bullish doesn't mean we necessarily need to take this trade. And honestly, I think maybe I've spent too much time on this pair. We could look at something else. Um, but yeah, I just wanted to help you guys see. I guess it started off by us looking at this. So you had a nice trend line break right here. Whenever you see the market come back up and kind of stay up here, ask the question, why is it staying up here? Oh, okay. It's because there's no liquidity here selling this. The liquidity's up here, right? So in all likelihood, this market's just going to continue higher until it gets up into there. Okay. Let's see. What does it mean if it has long bottom shadow, but candle is, I'm assuming you're going to say bearish is your next word on that, Darwin. So basically it doesn't the candle color doesn't matter as much. It's the shadow or the wick to the downside that matters a ton. And what also matters a ton with that type of candle that we were just looking at on that 4-hour time frame is the fact that you've got your body is thin and at the very top. Okay, very top body. That means that when that market during that 4 hour period came down, somebody just immediately said, "Oh, give me all of that." That's what happened, literally. That when you see a candle like that, they just said, "Oh, give me all the, give me every price you can give me. I'll take any of it." So what does that tell you? Oh yeah, this thing's going to continue higher. Yeah. Yeah. And again, you can't see it on the 1 hour, but yeah, this 4 hour looks pretty dang good. It's that guy right there. That is about as bullish as it comes. Yeah. And it's funny because that candle tells you more than even a green candle. And it's technically bearish, but because of the nature of what happened here at this price, that tells you, that gives you more information than even a green candle about the market moving up. Yeah. So anyway, it's actually very similar to this one right here. Okay, cool. Let's continue on, guys. All right, so yeah. So I'm seeing longs on the Euro Kiwi. Not, 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 yeah, not something you want to sell right now. Oh, this was nice back over here. It's over now, and we're in that trade, so that's fine. Like we're in the pound cap on the COT report. I saw another question earlier. It says, oh yeah, Sean's got it right here. It seems lately the vast majority of COT report trades are longs. Is that just a coincidence, or do you think it's intentionally picked the pairs to favor longs? No, it's a coincidence. I remember a couple years ago we basically had just short positions and not longs. But the reason why is just because the currency pairs that we've had to buy right now, the strong currencies, coincidentally just happen to be base currency pairs or base currencies in the pair. And the quote currencies that have been really weak, like the yen has been perpetually weak for the last 3, 4, 5, 6 months. It's just been super weak. And we've been milking it. We'll take it full advantage of the weakness on the yen right now. We have been take through the COT report. The yen has just been a terrible currency. And it just so happens that the yen is a quote currency in most cases. So naturally, whatever currency you're going to buy against the Japanese yen is going to be a base currency. Thus, you're going to buy. So it happens just to be a coincidence. In the future, when the yen strengthens again, that's going to be the currency we want to buy, and it's going to be the quote. So in that circumstance, you're going to have to short. So yeah, great question. Yeah, a couple years ago we basically only took shorts, but it was this year it's just been longs, pretty much only longs. Yeah, here's this pound yen. Pound strong, yen down. That's basically what we've got. Dang, that was good right there. Hmm. That's very similar to the Euro franc, this NZD franc right here. If we were to buy this one though, I would want some confirmation as far as liquidity goes, and I would need it on another higher time frame, and I just don't see it. So yeah, I'd have to skip that one. Okay, guys, I'm trying to I think I'm probably gonna go back to that Euro franc, but I felt like I saw something earlier. Did I miss it? Somebody remind me if I didn't write that other one down. I just wrote down the Euro franc. Thought I maybe saw something on a different currency pair that I thought maybe it was just an alert. I can't remember. Oh, it was this CAD yen, I think. So, yeah, it's pretty good. This is exactly what you want to see. So this CAD yen, nice trend line, several points of engagement, break a structure. So we could sell this now that it's already kind of broken down, and you'd probably put a stop there, something like that, because it's already tapped into liquidity. And then you could ride this down from here. Something like that would not be a bad trade. It might actually be the trade we take. Another idea is you could wait for it to break below that low it just made. I don't know if that's worth it though. So we have this option and we have the Euro franc option. We could take both or we could just take one or the other. My concern with this one is similar to the NZD franc in that the NZD franc doesn't have liquidity, like demand liquidity to work with. This one may have some demand for us to work with. I'm just a little bit hesitant. I'm feeling like this is starting to fall apart. The structure, like whatever was going on up here, is starting to fall apart and it's starting to curve over on itself. And I'm starting to see, like, if I delete all this stuff, let's just delete generally. My hesitation here is that we recently, not too long ago, had a break in a trend line right here. Okay, on this 15-minute chart. Okay, so that's my concern is that this still looks kind of like it wants to break below this. So I'm a little concerned with that because I mean I see the break over here and yeah, that does have that, but when you kind of broaden out a little bit more, it kind of looks like this wants to actually break lower, not higher, based off of what happened here. And this is a lot bigger, like this thing. Here, let's kind of grab this is a lot bigger. Whatever price action took place in here that broke that structure is a lot bigger than the smaller price action that broke structure right there. So we're looking at two different sectors. You have this thing that could indicate a long, but then you have this thing that's indicating a short. And so, yeah, I don't know if it's again, I don't have a crystal ball, Brooks. I think you could still take the trade. I'm gonna stay out of that one though. So nice work. I think that one I'm gonna be a little bit if anything, I'd actually go short to be honest, Brooks. But it is nice. It is a good analysis, and I see the argument for the long side. I do. So good job. Um, but this one I'd say I like a little bit more. A couple reasons why I like this one more. Because this was a little bit more of an established trend that clearly is broken. It's signaled off, and it hasn't. It's pretty much continued with its lower lows and lower high agenda. So you've got this lower low right here, and you have this high which came up and tagged liquidity, but it's still lower than both of these apex highs over here, and that's a good sign for what we were talking about. So I'm gonna have to say this one probably makes more sense to me. Yeah, I'm gonna have to go short on this one as the trade. And I will look, I put up more alerts, guys, so I'm gonna post more trades this afternoon or this evening as I see them. But I'm gonna go with this one. And I'm just gonna short at market. And again, make sure you're using a lot size calculator so that you're not risking more than you're willing to lose, all that kind of stuff. And we don't need to risk, you don't need to put your stop loss all the way out here. You can, but I'm going to try to keep things tight. Again, here's the thing. If I win this trade, boom, that's a 1 to 4, right? That's the whole concept. Is to keep it tight. Okay, so let's kind of mark a few things. So we have a BOS right here. And generally, this is liquidity just through here, generally. Okay, and then that's good. And for those of you that are new, make sure you have the link to the Telegram channel where we post the trades. This is the link right here. I'm going to put this in the chat box. For those of you watching this on YouTube, the only way you can get access to that link is if you join the program. And there is a link down below for you to become a member of Trading with Steve. Okay, so let me grab this. Okay, awesome, guys. Let's go ahead and post this trade and we'll get wrapped up here. Okay, and we're going to sell just at market, and the price is 107.869, and we're going to target at 106.844, and we're going to stop out at 108.131. Awesome. Okay. Okay, that looks good. Okay, fantastic. Let me look at some of these last comments and we'll go ahead and wrap up. FOMCs this afternoon, we want to wait until after, or being that it's not US pairs, that's okay. Yeah, that's kind of my feelings on the FOMC meeting is this should generally be fine. If you guys want to, you could try to maybe lower your lot size and increase your target just or stop loss just a little bit to kind of keep it a little safer. I think this one should be fine, just because of the nature of the pair and the news event. But and you guys can also stick out, just not even trade it either. As far as the COT trades goes and news events, doesn't matter if it's FOMC, GDP, unless I tell you guys to do otherwise, always keep the trades through the news events. Yeah, just trade through news events. Let the trades do their thing. You've got a stop loss and you have a trailing stop, so you should be taken care of. If there's a different type of news event like a Brexit or something, we'll approach that in the future, just because back when that happened, there was so much volatility. But this is just customary news. I'm not really worried about it. And we've already got safeguards in place, so we should be good. Okay, let's see any other questions I missed. Okay, I think I mostly got these. If I missed it, let me know, guys. Okay, we'll have a fantastic afternoon, everyone, and we'll see you guys for the COT Report webinar tonight. So thanks for coming and have a fantastic rest of your day, and we'll see you guys in the next webinar.